Hello traders and welcome back to the Forex Geek. In today's video we are going to explore a highly effective strategy that combines two of the most reliable tools in technical analysis. We're talking about the moving average and the RSI. So this strategy is designed to help you identify trends and momentum with precision, allowing you to make more informed trading decisions. So whether you're a beginner or an experienced trader, this method can be applied across different time frames and currency pairs, and even the stock market. So stay with me until the end of this video as I will walk you through each step of the strategy, including how to set it up, when to enter and exit trades, and how to manage your risk effectively. By the end of this video, you will have clear understanding of how to use this powerful combination in your trading. So without wasting any much of your time, let's get started. So let's start with the strategy overview. The moving average and RSI strategy combines two essential technical indicators to identify high probability trade setups in the market. The foundation rests on the relationship between the 10 period and 20 period exponential moving averages, supported by the relative strength index set at 21 periods. So I'm going to quickly add the indicators to the charts. First, let me add the RSI. And then I'm going to add the exponential moving averages. Okay, I have added the RSI. I'm waiting for the exponential moving average to load on the chart. Okay, we have the exponential moving average on the chart right now, and remember the settings we talked about is the 10 period and 20 period moving averages. So I'm going to quickly make this the 10 period, and also add one more EMA, and the length is the 20 period EMA, and their colors are just going to be blue and red. For the 20 period moving average, the color is going to be red, and for the 10 period moving average, it's going to be blue. And there we have it. So we have the moving average on the charts, and we also have the RSI on the charts. So this combination effectively filters out market noise while providing clear signals for both trend direction and momentum. This strategy excels in trading markets where price shows clear directional movements. When the faster 10 EMA crosses above or below the slower 20 EMA, it signals a potential trend change, and the RSI adds a crucial momentum component, confirming the strength of these moves when it aligns with the moving average signals. So trading with the trend significantly increases your probability of success in the markets. The moving average acts as a dynamic support and resistance levels, while the RSI helps identify potential reversal points and continuation patterns. This approach removes emotional decision making from your trading process. So as you can see on the charts, we have these two technical indicators working hand in hand, and we're going to show you exactly how you can use both of them to trade in the next section. So stay with me. The first step in implementing this strategy is ensuring your chart is properly configured. So set up your workspace, the 10 EMA, the 20 EMA, and the RSI indicator with a 21 period setting. So remember, 21 period here, my RSI is the 14 period. I'm just going to change it to the 21 period. And there we have it. We are currently on the 21 period on the RSI. Now the next step is your time frame. The 4-hour time frame provides the most reliable signals, though the strategy works effectively across multiple time frames, but you should use the 4-hour time frame. Currently I'm on the 4-hour time frame on Apple stock, and let's head on to how you can trade with this strategy. For bullish trade setups, wait for 3 specific conditions. First, the 10 EMA must cross above the 20 EMA, and second, the RSI should move above the 50 level, and third, the price action should show rejection from the moving averages, indicating buyer strength. And you can see that clearly here. We have the 10 EMA crossing above the 20 period EMA right here, and at the same time we have the RSI going above the 50 level and even finding support in the 50 level here. You can see that, and this shows buyer strength. You can also see rejections. You can see this momentum shift. You can see this gap right here showing that indeed buyers are stepping into this market and we should be looking to buy. We have the break of market structure right here, and traders who use solely price action could be looking to get in at the break of market structure right here. So we'll just be looking to place a buy entry, and our stop losses should be below, just below that swing low, and our take profit could be at significant resistance levels like this one, or you could just target a fixed risk reward ratio of 1:2 in the market, as you can see right here. So this is for bullish setups, and it happens in the market multiple times. So you can see another example right here. We have this with the 10 period moving average going above the 20 period moving average, and at the same time we have the RSI going above the 50 level. So this is a very perfect example, and now you can see price giving us this steady buyer strength. We can see this steady bullish movement, and this should give us a confirmation to enter a buy trade with our stop losses below that swing low and take profits at significant resistance levels like this one or this one above right here. Or we could look to take profits at fixed risk reward ratio of 1:2 or 1:3, depending. That's how I would have been able to take advantage of this trade. Now for bearish setups, you can see a bearish setup here. For bearish setups, it's just exactly the opposite of the bullish setups. For bearish setups, just look for the opposite conditions. The 10 EMA should cross below the 20 EMA, while the RSI moves below the 50 level. So wait for price rejection from the moving average before entering short positions. You can see we are bullish. We are very bullish right here. This is why I recommend the 4-hour time frame. You can see everything clearly. The trends are very clear, and you can see we are bullish. You can see this example here, this bullish setup that we had here. You can see coinciding with the RSI, and that's an indication for a buy setup. So we have been bullish. People who entered buy positions from here and were able to ride this trend all the way up, they made a whole lot of profits and gains from this setup. Now we are looking at the bearish setup, and you can see this, the 20 period EMA crossing above the 10 period EMA, or you could just say the 10 EMA crossing below the 20 EMA, whichever one. And we have the cross happening right here, and at the same time we have the RSI going below the 50 level right there. Now you can see we should be looking for rejections. We should be looking for selling strength, seller strength, showing that indeed sellers are stepping into this market and we should be looking to short. And you can see that with this gap right here, showing that indeed sellers are in this market and we should be looking for selling opportunities. So we just enter a sell position from here, and our stop loss above this swing high, and you could just set our take profits at 1:2 risk to reward ratio, or we could set it at significant support levels. So this is another reason why you should set your stop loss and give your stop loss a little bit of room to breathe. So you don't set your stop loss at exactly the swing high. You could just give it a little room to breathe. I just extend this, and you could just see as the market went down after our signals. Now this was for this setup. Let me look for one more bearish setup before we call it a day. Now we have this bearish setup here. You can see the 10 period EMA going below the 20 period EMA. At the same time, we have the RSI going below the 50 level. So this happened just recently, and we should be looking to take a sell trade at the confirmation of all of this. Our stop loss above that swing high, and our take profits at this support level right here, or we could just target a 1:2 risk to reward ratio. And there you have it. We had a 1:2.36 from this setup, this bearish setup we had here. Risk management is crucial for long-term success, so place your stop loss above the recent swing high for short trades or below the recent swing low, like I said. And take profits should be set at minimum 1:2 risk to reward ratio, targeting previous support and resistance levels. So right traders, we've come to the end of today's video. If you found value in this strategy, make sure to hit the like button, subscribe to the channel, and turn on the notification bell to stay updated with more practical trading strategies. See you in the next video, where we'll dive into another powerful trading concept. Make sure you've subscribed.